capital gains is when you sell an asset. If I hold my asset for the next 10 years and I don't sell, and it keeps, if I buy it for $100 and the next 5 years it is now $5,000, there's a $4,900 on a yearly basis, but I don't declare or pay taxes until when I make a sale. If I sell that asset and I lose the asset, I don't pay taxes because I lost the asset. But if I sold and I made profit, even if I reinvested that money into buying other stocks, I still have to pay taxes on that capital gain.
Oh, okay. I need to hone in on that because this is a critical information that, and I want people to listen very, very carefully about losses. People seem to think, and I also at some point thought so, that if you set up an LLC, like I said, this is not just, it's important when you're building wealth to go with the right vehicle. All right, Keke Napep cannot take you 10 hours uninterrupted. Okay, so you need to know where you're going, the right framework. So, say for instance, I bought, and I know you had a client that this happened to. So people say, okay, January I bought a stock where I made $100. Okay, $100 gains. Oh, it's January, I don't pay taxes till the end of the year. I reinvested it. I make $1,000. Oh, fine. So that's already $1,100 in my coffers. I do that. I make $100,000, maybe half a year. Towards the, and I was buying, I was selling. Then in November, I go to the market and I lose $90,000. Okay. And I only have $10,000 left. Oh yeah, because at the end of the day, from January to December, it was only $10,000 I made cumulatively, which is true. And maybe it was an LLC. So tell me, am I just going to pay taxes on the $10,000?
No, you don't, because now you are deferring your taxes. I have $50. I go to the market and buy some bananas, right? I sold them for $60. Now I just made a $10 profit, right? Now I reinvested my $60. I sold again and I made $100. What happens? Now I have $50 in profit. $50 in profit is my capital gain. I need to pay taxes on it, right? Now I reinvested my $100 and I lost the $100. What happens? It doesn't write off the $50 I made initially because I was deferring my taxes, and we didn't discuss the 1031 exchange. That's what happens when you sell your property and at that point in time you have capital gains on the sale of a property, and you reinvested into like kind of property, the same kind of property. 3 things you must keep in mind. 1, it must be the same value of the property you sold, or it must be a higher value. 2, you must have the new property within 45 days and the transaction was completed in 180 days. If I do any of these 3, what happens? I just reinvested my capital gains into a new property. Does that mean I don't hold the first transaction I did? No, I still hold, but there's a tax deferment happening at that time. And that happens in most, I'm deferring my taxes, then I reinvest, I keep reinvesting. At some point, maybe later in the future, when I want to pay these taxes, the tax rate might reduce. One time before now, corporation used to be 35%, now is at 21%. I don't even know what's going to happen. Some people are proposing 14, 15%. Then maybe that I can take benefit of the tax rate at that time. But regardless, I'm deferring taxes. I still have to pay taxes on my deferred taxes.
At some point, because a lot of this property goods, that's why it's very important to get advice from legitimate sources. They don't tell you the pitfalls. They don't tell you about the fact that you're deferring the taxes, that you're still liable. And so you can, don't worry, you buy a property, you make $20,000 on the property, you don't have to pay taxes, just roll it over to the next property within 6 months, and you keep rolling over, and you roll over to infinity, to eternity. But the truth of the matter is that what you're saying to me is that I'm owing taxes and they're calculating the taxes. So at the end of the 10 years, at the end of 8 years, if I had lost all the money, am I liable for taxes?
Yes, because it was a choice. You invested you did a transaction, made profit, and you reinvested it. That's like the same thing as I was talking. Maybe the same thing applies to 401k. For example, you have a job, you have a 401k account, and you switch job, change jobs to a new job. You have 60 days to roll over. You can do a direct rollover. I move from this 401k from this company and I move to a new one, right? Doing that,